let's address what everyone is focused on. Hedera is down. The price is around 9 cents. It's 84% below the all-time high from September 2021. Daily momentum is weak. The RSI is oversold. Sentiment is negative. That's all true. I'm not going to gaslight you with false optimism. Here's what Javon Marks identified that, really changes the entire analysis. The broader structural trend breakout is still intact. That's the part most traders completely miss because they're obsessed with daily candles. Let me explain what a validated trend breakout actually means. Hedera had a long-standing resistance trend that was limiting upside movement. Multiple attempts to break above it failed. That's why price stayed suppressed for years. Then the breakout happened. The price moved above that resistance. And here's the critical part. The price didn't just touch the resistance once and fall back. The price moved 93% above the breakout zone. That kind of sustained movement above resistance is validation. It confirms that buyers exist at these levels. It confirms that the breakout wasn't a fake out. That 93% confirmation is significant because it means the structural trend change is real, not temporary. Okay, so let's look at the actual technical structure. Hedera is trading around 9 cents. Javon Marks identified the estimated upside extension to 50 cents. That's a 420% move from current levels. Before you dismiss that as fantasy, understand what that represents. It's not arbitrary. It's based on the measured move from the breakout pattern. It's the mathematical extension of the structural trend that just validated. The 10-cent level is the immediate resistance. That's the psychological zone that needs recapture to realign bias. Above that, the path to 50 cents becomes clearer. Is 50 cents guaranteed? No, but it's structurally supported. It's not speculation. It's pattern extension. Now, let's look at what the actual market data shows. The current price is 9.141 cents with a minor pullback. 24-hour volume is $161.04 million. The market cap is $3.93 billion. The daily range is from 8.765 cents to 9.375 cents. That's not panic selling. That's controlled trading. That's an orderly consolidation. Panic selling looks different. It looks like volume spikes and price crashes through support on heavy volume. It looks like capitulation. Hedera isn't showing that. It's showing stability. The 24-hour volume of $161 million against a $3.93 billion market cap is healthy. It indicates continued participation, not forced liquidation. The RSI is at 35.39. That's oversold territory, which technically should create upside pressure. It's below the neutral level of 50, which signals weakness, but it's a signal of exhaustion rather than acceleration downward. The MACD histogram is shrinking. That's the key signal. Shrinking histogram means downside pressure is decelerating. That's not bullish yet, but it's not bearish either. It's the setup phase before turning. Here's the perspective that matters. Hedera is 84% below the September 2021 all-time high. That's a massive discount. That's the price being reset to fundamental levels. In crypto history, that's where repricing begins. Projects that get crushed 80% or more and maintain structural integrity don't stay crushed. They recompress and break out. The reason is simple. Institutional capital knows that 80% plus discounts on validated infrastructure attract different buyers than peak price holders. That capital is patient. That capital holds for years. That capital drives decade-long repricing. Alright, if this breakdown of Hedera's structural consolidation and the long-cycle compression setup just changed how you think about evaluating projects that look broken on daily charts but structurally sound on monthly timeframes, you need to understand the deeper mechanics of how long-term repricing actually works. Most creators talk about daily momentum and short-term bounces, but there's an entire intermediate layer where understanding consolidation patterns and structural validation determines whether you're positioned for decade-long wealth or, just watching from the sidelines. If this analysis of Hedera's trend breakout validated structure and compression setup helped you see why being 84% down combined with stable consolidation is actually bullish, smash that like button right now. It tells YouTube this deep structural analysis matters, and it helps us push this kind of long-cycle pattern recognition to more people who actually understand how repricing works. And if you haven't subscribed yet, hit that subscribe button and turn on notifications. When projects consolidate after validated breakouts, we analyze what that means for decade-long positioning. Let's keep going. Let's talk about the $1 by 2030 scenario. Is that guaranteed? No. Will macro conditions be perfect? Unlikely. Will adoption accelerate perfectly? No. But is it structurally supported? Yes. If Hedera hits 50 cents, which is the validated pattern extension, and then continues on a multi-year growth trajectory toward $1 that follows the historical pattern of validated breakouts from multi-year bases. That's not fantasy. That's pattern recognition. Alright, so here's what I want you to walk away with. Hedera looks broken on daily charts. The price is down, the momentum is weak, the recent action is frustrating, but if you look at the structure, if you understand what Javon Marks identified, the story changes. Multi-year resistance has been broken and validated. The price moved 93% above the breakout zone. That structural change is real. Current consolidation isn't capitulation. It's the normal compression phase that follows breakouts. The volume is stable. The range is controlled. Buyers are defending support. Being 84% below all-time high combined with a validated breakout is actually the setup phase for repricing. The near-term target is 50 cents. That's not arbitrary. That's the measured move from the breakout pattern. The longer-term target is $1 by 2030. That's not guaranteed, but it's structurally supported. For investors willing to hold through consolidation phases and understand multi-year cycles, Hedera's current setup represents the kind of structural opportunity that produces decade-long wealth. Thanks for watching TJ Crypto World. If this breakdown of Hedera's structural trend breakout and consolidation setup helped you understand the difference between short-term chaos and long-term structure, please drop a comment below. Do you think Hedera reaches 50 cents before the next major cycle? And, before you leave, check out our latest video on how multi-year bases form and break. I break down the exact patterns that precede repricing events. The link is pinned in the comments. Stay structural, stay patient, and I'll see you in the next one. Peace.